Good morning, folks. Welcome to a midweek edition of the Satori Traders Precious Metals News. Last week I did a Tuesday evening update. Obviously, this is a Wednesday morning update, and so I'm trying to decide which of those I prefer. If you have any preference at all, please let me know in the comments. I'd love to have some feedback. So let's get rolling. This is gold in the weekly time frame. And to my eye, what's going on in this time frame? We got a, big impulsive movement. This is a resumption of the uptrend, gold's uptrend. That's a 62% Fibonacci retracement, and now gold is resuming its underlying trend, which is up. We're headed to 2157 by the end of 2021 or early 2022. And so anyway, with yesterday's push and this morning's push, we're making progress on working through this resistance. This is a 40-week moving average, 10-week moving average. And we pop down into, energy, mid-range and rising. MACD starting mostly flat, but it actually is up in bull mode with both indicators above zero at this point and on a buy signal. And we got a moving average buy signal a couple of weeks ago. So in the daily time frame, we can see, gold's been dealing with this resistance, obviously, for the last, week and a half. Overnight and then especially this morning, obviously gold is, he got a good cup of coffee this morning and has decided to push up into the 200-day and 50-day moving averages. And of course, so far, that's a big bullish, impulsive candle pushing up through that resistance. It's indicative of a lot of strength underlying this move in this market. Again, MACD, we're coming off this very oversold level, buy signal, headed up towards bull mode, not there yet, obviously. Energy is very elevated and still rising. So gold's looking very good in the daily time frame and the weekly time frame. So gold is good. That's always true. Here's silver in the weekly time frame, and still, nothing exciting going on here. We're just working, building out this flag, finishing out this flag pattern. Here's our flat pole. And again, crossover buy signal in the daily time frame. So again, move, that's pullback. Now we're getting most likely, or my bullish bias, is a resumption of the uptrend. And so right now we can see that silver is pushing into resistance at the median line of this. That's a modified shift pitchfork. And we can see that for that was yesterday and then Friday, that, this price appears to be reacting or behaving within this pitchfork. This pitchfork is accurately describing the price action. That's probably the best way to say it. Let's keep rolling. So this is the mining stocks in the weekly time frame, and I've been using this as my proxy for the mining stocks, and I've been trying to guess at, okay, where's the bottom of this channel? And I think I started with, I'm pretty sure I started with it up there or something like that. That's my bullish bias. And then I pulled it down once, and then last week I pulled it down a second time, hoping that bullish doji right there was the bottom of the channel. And so obviously that wasn't the bottom of the channel, and the mining stocks are continuing to kind of churn sideways. We still have this double bottom intact, and so far this is a higher low. So I mean it's very close to being a triple bottom here, but so far we have a technical uptrend still intact. Higher high, higher low, with the assumption that we're, not far from heading off to a new higher high. So, and again, my bullish bias. Let's see, mining stocks. This is the daily time frame. Last week I'd backed up to show the downtrending channel. I was looking for where's our next support level. If this higher low fails, where are we headed next? And so this is likely to be a strong support level down here. With what the metals are doing this morning, let's look at daily chart. With what the metals are doing this morning, I would expect that the mining stocks aren't going to push any lower certainly today. Let's say here's the silver mining stocks. Again, they're hanging on this. This is a support level. We can see there's a prior low. And we've got, this is, what's that, median line extension of this shift pitchfork, and then coming down into this support resistance zone. So anyway, like GDXJ, SIL also has strong support pretty close below if we need to test that. The dollar is an interesting animal. So the US dollar is the world's reserve currency, but that status is in the process of dying. And so it's not going to be surprising to see behavior in the US dollar doesn't really make a lot of sense. So anyway, we just need to keep in mind that there is a macro trend going on where the rest of the world is deciding that they're looking for alternatives to the US dollar as the world's reserve currency, and they are finding them. China's doing contracts for oil denominated in the yuan. Russia's doing contracts for oil denominated in the ruble. I mean, we've clearly moved out of the time period where the dollar was it. And so anyway, that's a macro dynamic we need to keep in mind. Here in the chart, we can see that the dollar is pushing up into this resistance zone and the median line of this Andrews pitchfork. So this is an uptrend. Energy is clearly elevated and rising sharply. MACD is on a buy signal and headed higher, appears to be headed higher, not quite into bull mode yet. And then we've got that big bullish candlestick there. I mean, that's a bullish chart. And then if we drop down into the daily time frame, I'm still watching this Fibonacci extension of this big impulsive spike here. The dollar is dealing with currently the 62% extension level. It was looking at the weekend, it was looking like that was going to be it and the dollar was going to roll over. Well, it made it all the way down to the 20-day moving average. And then obviously yesterday we got that big strong spike, and continuing kind of waffling this morning. It opened high. Now it's pulling back some. So anyway, the US dollar is an interesting animal. This is interest rates, or the yield on the 10-year note in the weekly time frame. And here again, in my opinion, this is we got a 62%. Now I think in this case it's actually a 38%. Anyway, that is a standard Fibonacci retracement of this impulsive price movement, interest rate movement. And in my opinion, the underlying trend will at some point reassert itself, and we'll be back off, we'll be back headed for higher interest rates until the central bank comes in and tries to squash them down. So, and in the daily time frame on TNX, we can see on the weekend update, this was my eyeball, you see something that looks like that. And of course, on the weekend, let me scooch, we'll not look at those candles. So Sunday, we were looking at that, where, to my eye, that is a capitulation. We're in the steady downtrend, and then we get to the end. We don't know it's the end of the trend yet, but we get to a point where investors just puke. They just throw their shares into the market. Please get me out. They're making all kinds of promises to their God, saying, if you just get me out of this position whole, I'll never do X, Y, and Z again. And of course, that's when the market reverses and heads back in the direction of the underlying trend. So anyway, there was a lot of energy expended in that action there. We can see yesterday we got that super bullish for higher interest rates. That big impulsive candlestick, price closing near its high, which is bullish. This morning so far, we're kind of digesting this big move. And again, all of that's big movement in the markets. So, and I was going to suggest that there was no manipulation going on there, but I won't even make that comment, although I just did. In Bitcoin remains in a technical downtrend. It's making a series of lower highs and lower lows. The moving averages are not in bullish alignment. They're not fully in bear alignment, but they're not bullish either. You can see the 200-day moving average is generally trending up, gently trending up, but the 50 and the 20 certainly headed lower. Bitcoin has been trying to push higher for, what's that, probably 2 weeks, 2.5 weeks, and has been held back by resistance at the moving averages and the upper median line of that Andrews Fork. I'm yet to see any volume action in Bitcoin that makes me think an uptrend might be starting. That's dying volume, declining volume. As I pointed out, I did notice at the weekend that we potentially have a divergence between the price action, which is down, and MACD, which has started potentially trending up. So divergence between price and MACD can mark the end of a trending move. It's not a super reliable indicator, but it is something worth watching. Equity markets yesterday obviously had a big push. At the weekend, I was suggesting that 43.90 would probably be the high of this move normally, but because we were so close to this big round number, we were likely or might see a push in that round number. I think what I pointed out is that round numbers tend to act like magnets, and so price gets pulled into round numbers, which, it's a human psychology thing, but we can think of round numbers as magnets. And so anyway, on Monday, we got a high of, 43.86, and then yesterday we pushed to 43.92. So, there was if you had set your target at 43.90, there it was yesterday. Are we going to see a push? Are we actually going to hit 4,400? That remains to be seen. MACD still has room to run before it gets back up to this overbought level of this prior MACD high. So MACD's got room to run. Energy clearly elevated. So, based on that, we could well see SPX hit that 4,400 target. Of course, there will be plenty of sellers shorting that level. They're going to be selling that level short with an expectation that we'll get some kind of pullback. In the Dow yesterday, Dow's clearly not as peppy as the SPX and Nasdaq. So it's still trying to make it back to this prior high. It's working on it. MACD's in bull mode on a buy signal, energy elevated, but clearly the Dow is not behaving as bullishly as SPX. Is that a divergence that equity bulls might want to be concerned about? Potentially. It certainly indicates that we don't have a broad movement higher in the equity markets. It's select sectors of the equity market moving higher, not the whole market. So yeah, if I was an equity bull, I'd be paying attention to the divergence between SPX and the Dow and Nasdaq. So here in Nasdaq, series of new all-time highs. We got a pullback to an obvious support level. This was a breakout level, and it's the median line of this Andrews Fork. Price pushed higher Monday and Tuesday, and then yesterday we got a spike higher, and then obviously a pullback by the close. Buyers were unwilling to commit to that new high, and sellers were selling that new high. And so we end up with this, that's actually a bearish doji, almost a gravestone doji. Gravestone doji is when the bar of the candle is at the very bottom. That's a gravestone. And so that's very close to being a gravestone. Again, MACD in Nasdaq, super overbought based on prior highs, energy elevated. So anyway, not a bullish candle in Nasdaq yesterday. Brent, again, steady uptrend, predictable pullback, resumption of the uptrend. And then, yesterday it looks like price has pushed back through the 76 level. It's got resistance at the median line of this fork to deal with. Obviously 80 as a overhead. Let's take one last look at the metals. Here's gold in the daily time frame. Continue to push up into that That's our 200-day moving average. Let's drop down. There's on the 4-hour time frame, it's just more obvious that we had this little, if you want to look at it that way, that we could look at this as a, triangle pattern, flag pattern, however you want to define that. And now this morning we're getting a breakout from that flag pattern, if you will. Let's see, silver in the daily time frame is still pushing up into resistance. Yeah, and so same thing here, 4-hour time frame. That was resistance, and now we're pushing up into that level again. So anyway, metal's looking good. Folks, have a fantastic day today. Make lots of money, or just enjoy your life. And I will talk to you soon.